Hey guys, it's Jim from jagfx.com. This video is just going to be a update on the SAR method that I've been trading on demo account and sharing with you guys. I know it's a little bit confusing, so if I do a video every now and then, it might help explain the whole process and make it a little bit easy for you to understand. Trust me, it's not that hard, but I've been doing it for years, so I know exactly what I'm looking at, and it's a bit, I appreciate it can be a little bit confusing for some. So it's called the SAR method, and just to go over that, that stands for stop and reverse. So technically it could be in the market at all times, but generally we're not, but that's just what it's called. So as I said, I'm running it on a demo, so do not follow my trades live. Follow them on a demo, but don't. I've got many pairs. I'm not even sure of the rules. They're not set in concrete as such, and I've got a lot of correlated pairs, so you'll see that I've got many yen pairs, a few pound pairs. I'm just looking for the volatile ones. They sort of tend to work the system better. So basically I'm just hammering in the system at the moment, trying to build it up and get the most trades I can out of it, so I can work out how to manage the trades better by using the indicators. I'm making notes as I go along, and I just know what works and what doesn't. So this is just more a demonstration account, and that's the reason for it. So you can see it's a big account. It's just under 50,000 demo account. That's why I'm trading one full lot, which is really not an issue. It's on the 4-hour time frame. You can see all the pairs I'm trading along the bottom here. I've just used enough to fill up the line at the bottom. So we'll just go through them so you can have a look. And this is probably the worst example, the first one, the first page, the Aussie New Zealand. If you noticed today, I made a note in my Facebook group that I was taken in on the open with the spread today. So it was such a huge spread, which is always the case with this pair when Monday markets open. And it took me into a buy trade when it didn't even look like price was even near the blue line, which was the red line previously. So to explain where we're at the moment, the red line's the stop and reverse, so you can see the green sort of dotted dash line underneath that. That's my stop. It's a few pips below, and that's my stop and my reverse. So if this rolls over and comes down, that'll take me into a sell. All right. So at the moment, we're basically saying the blue line's the entry level, and the first yellow line is the high of the candle that gave me the entry. So if this candle we're on now closed higher, I just take one of these yellow lines up and move it up to the top of that candle. But at the moment, it's a bit of a tricky one, so we'll move on and have a look at some other ones. Aussie USD going nowhere at the moment. It's a sideways market. It's the only pair I'm not in a trade yet. That's so the red line's here, looking for it to break down and give me a sell. Then we'll start doing things. But let's just keep on moving. Swiss franc, Japanese yen. Now we're in a sell here. We've already cashed out. We took a buy profit on this. As soon as I got these vertical lines I put on the chart, these grey vertical lines, I put them there just to give me a reminder. As soon as I got a red dot on the MACD Platinum, and I could see divergences forming, you can see it's bearish divergence forming. Got a red dot on the MACD Platinum. I put this grey vertical line on the chart just to give me an idea that I should start looking, if I was in a buy, to start looking to jam my stop up, my SAR up. And I did that, and I think I bought it on the lows roughly about here. And as you can see, got a red dot on the QMP. Took me that blue line, that used to be the red line. So what happens is you put the blue line there, then the red line goes to the high, which is this candle here. And that's where my stop and reverse is up there. Now I've had another low there, which is that second yellow line, and then price went up, so nothing happens there. Now price is dropping nicely now. It's really looking good. So this candle closes in about 2 hours, and if it's down here somewhere, then one of these other yellow lines that are up here will get dragged down to the low of that candle. So we'll just keep on going. Pound Swissy, it's also on a sell. See, I've got the vertical line here because I've got a blue dot in the MACD Platinum. That means here there's a sort of a price came down and had a bit of a spike up and down again. To me, that's a good place to put my SAR level. So So there's my entry. I'm in a sell. There's my entry. There's my risk between the blue and the red line, and we've got the 3 yellow lines in play so far. We've still got 1 out of play. See, I drew trend lines on here just to give me confirmation. I've got divergence, looking at everything. Move on, euro pound. We're in a buy here. Again, we've got divergence, we've got a trend line, and price is going against me. So entry is the blue line. The high of the candle, the first yellow line is the high of the candle that gave me the entry. And at the moment we've got no new highs, so the 3 other yellow lines are below the SAR level, which is down here. So if price drops down and takes me out, we have a losing trade and we're back into a sell. Great British Pound, Japanese Yen, same deal. Trend line broke. Here's a couple of dots on the MACD. Start looking, as soon as I get that second red dot, start looking to bring it up. You can see price went up here and sort of just rolled down, had that little spike down and back up again. That was where I put my stop and reverse, and it's taken me, I've had a red dot since then, it's confirmed the sell, and we're heading down. So blue dot entry, yellow lines now looking for new lows, and we've still got 2 yellow lines in play. So it's looking pretty good, that trade. USD Canada, we're in a buy here. Again, we've got a trend line break. We had some divergence, bullish divergence. Yeah, look, I think it would have been, the grey line would have been in this area here. I couldn't really get a look in somewhere up here, so I've got that blue dot. Price had another little spike up, then we had that bearish candle. That's roughly where I would have put my entry. So it's around that blue line there, and we've had two highs. So we've got 2 lines in play, and the way we're going, we'll have a 3rd line in play. I'm going to buy there. So, oh, there we go. Here's a good example. This trade was in a buy, as you can see. Now it's ripped right through the SAR level. So now it's stopped out for a loss, and now I am in a sell. So this is a good example. I'll show you exactly what I do here. Now, the entry was up here somewhere, and it only went that much before it fell over and rolled over. So all I'm doing is taking that yellow line there, that's my top yellow line, moving it out of the way, taking that red line, which is my SAR, and putting it where I just took that yellow line from. So that goes there. Now, we take the blue line down to my point of entry, which is here. And these other 3 yellow lines, I'll move them out of the way because I can't put any yellow lines on yet until the candle closes. Like, even though that candle broke, gave me my entry here, I can't put a yellow line until I get a low on that candle. So that makes sense. Now all I'll do, and I won't do it here, but all I do is look for the high on the candle. It's gives me the red line, and I can see it's 107.393. I'll add 5 to that, and I'll add the spread, which for the euro is only 1 or 2. So basically I'll add 7 pips to it, that high, and I'll put in a stop at that level there, and I'll put a buy stop order in at the same level. So that'll get me into, it protects me and gives me a buy. So now I'm going to sell. That's all it is, just move the lines around. It doesn't look like much. It can be a little bit confusing, but just bear with me. I'm going to show you another chart soon. So I'll come back to this later and put the orders and stuff in, but just give you an idea what's happening. Right, Great British Pounds, we're going to sell here. So we've got the vertical line, we had a blue dot on the QMP and a blue dot on the MACD Platinum. So I jammed that SAR level right down to that little high there, and it's dropped up, and it's a good little fractal that it's just rolled up and rolled down nicely. Now we're heading down the way we should be, and our risk is only between the blue line and the red line. USD Japan, in a sell again. We took some profit on this buy. Got those red dots, and it just gave me an early warning. Got the SAR moved up, which was a good thing, and it's taken us into the sell. 2 yellow lines in play, and price is going sort of sideways at the moment. Euro Japan, oh yeah, baby, look at that. This was one that we were following trade by trade, or moving the lines on Facebook group. We had a buy. As soon as we got this vertical line here with a MACD, I brought the SAR level up to where the blue line is now, and then we got the red QMP dot. We've got divergence, and eventually it rolled over, took me into the sell. 1 low, 2 low, and we're going to have a 3rd low. So we'll bring one of those yellow candles down, and it's looking fairly good. So look at the Euro AUD in a sell here. Look, this is a pair I probably won't be trading, the Euro Aussie. It's just a sideways, messy looking chart, but I know it can move sometimes, that's all. So we'll just bear with it. But it's looking pretty good at the moment. Got a pretty tight SAR there, and it's going heading south. Perfect. Pound Aussie. Here's one. I'll just expand this a bit. All right. It's in a sell, as you can see, and I've got a blue dot on the MACD here. So I'll put my little grey line, vertical line on the chart, and I'll just have a look and look for something obvious. Now that blue, so we had a bullish candle there, and that's a sort of an inside candle, slightly bearish, but then you bang, look at that big one down. So that area there is a perfect place to bring down the SAR level, and it reduces. So there's your risk between the blue and the red. So it's really jammed it in. So it's made it nice and tight, that one, so that's good. So good example, and we just hopefully it'll just keep on dropping away, and we can get all the candles involved, get all the lines involved, and make some pips out of it. That's the plan. Right, Aussie Japanese yen. Again, it's like a lot of the other yen pairs. We're now in a sell. Yeah, it's looking good. There's nothing for us to move the SAR level as yet. We've got divergence. We've got good sell signal. Looks like a double top even. Yeah, looking good. So we'll just wait there and try and get these 2 other yellow lines in play. And you've got to remember, the trick is the plan is to get the red line on the other side of the blue line. So whilst it's on this side in a sell, we're losing. We haven't locked in any profit. We need it on this side below the blue line to sell, but obviously above the blue line to buy. Let's go to pound New Zealand. I've just expanded this one because this is like the other pound. Grey line here, where I've got that blue dot in the MACD platinum. So I just give it a little bit and have a look and wait and see, and look at that. We get that drop off, big candle dropping off. So basically prices come up and rolled over. To me, that's a good place to put the SAR. It's just outside the entry level, so even though technically it's underneath because of the spread on this pair, which is big, and the 5 pips leeway I'll give it on the buy side. It's actually we've got a small loss there if it reverses. So, but we have all 4 yellow lines in play, and it's always a little bit harder to see. I'm just trying to show you I prefer the charts a lot tighter. Gives me more of a visual. But yeah, it's looking alright, this one. Now we'll just go to the terminal and have a look, see where we're at. So these are all the open trades at the moment. So as I said, we've got all the pairs in play except the Aussie USB. So you can see these are just some pips. They're all for one lot. Don't worry about the size of the trade, it's not important. So we're sitting on profit 2,900, so that's probably about 250 pips, 240 pips all up, which is good. You can see the balance and the equity over here, no dramas. And below that's all like SAR orders. So everything except the euro will have a stop because I haven't done it yet. Remember, that switched into a sell. Everything else has got a stop loss, which will be the same as their reverse order, same price. So it's stop and reverse. And if we go into account history, you can see we took a loss on the euro there, that one that's highlighted in blue, minus 785. No big deal. It looks like a lot of money because it's a full lot, but it says that it's a demo account, and we've had 3 wins on so far. These are older trades, don't worry about them. Yeah, had 460, 790, 320. So basically we've had about 700, close to 800 profit. And we've got nearly, what it'll say on the table at the moment, 2,700, so it's going all right. Now, one question I get a lot when I used to trade this before was people weren't sure how to start a sequence. So what I've done here is I've just brought up a New Zealand USD 15-minute chart. You can do this on any time frame. It's just I want to show you how to initiate a trade. Now, so we've come to the charts and we want to set it up for the right-hand edge, so the current price. So all I do is I throw my 6 lines, 4 yellow lines and 1 blue line and 1 red line on the chart. And all I do is go back on the chart and have a look for a decent move. So see up here, there's a decent move up, and here there's a decent move down, there's a nice trend up. So all I'm doing is looking for a decent move that I know from I would have gotten a trade. So for example, I would have gotten a sell trade with the SAR at that high, and the entry would have been on that there, and I'll show you why. I'll just bring up the crosshairs. So we're assuming we're in an uptrend here in a buy. Gets to this level up here, we've got that red dot on the MACD Platinum. Give it a couple of candles, price sort of drops down and heads up again. That's where I would have moved my SAR, guarantee you. So that to me is my entry. Now all I do is I just go through the motions like I took this trade, which I know I didn't because we're trying to get to the right hand edge. So I'll just go quickly. So I'm just put the yellow lines on the lows. So let's just have a look. We've got a blue dot down here on the MACD Platinum. Not much happening there. It would have been nice if it's a bit lower, I would have put that one, but it's gone up and dropped down there, so I would have moved my SAR, say, to this one. This is all hindsight, so don't get too concerned. So that would have been my SAR level. So price has broken through. So we take the bottom yellow candle, move it up to the top of the candle that gave me my entry, which is there. Bring the red candle down to the low, replaces that one. The blue line goes to the entry, which is there, and we get rid of these other yellow lines. So we've got one yellow line in play. So we're in a buy. There's our risk. So just follow along. We've got new high, so we just go there. New high. This is a 15-minute chart, so it's going to be a bit messy. And to me, price has come down, broken through the box. Remember I talked about the box in one of my previous videos. I'm trying to reduce my risk, and it's gone back up into the box. So I would consider moving my SAR to that level there, which is, you can see it's paid off. So we've still got new highs here. We've got very little risk on the table, so I've got no real concern. I don't really have to keep an eye on the dots as long as price is moving up. You see it came down, came close here, which is all right. I'm just trying to get us over to the right hand edge. So these are just, you would just do this, go through the motions. You're not taking any trades obviously because this is in the past. Again, we've got a red dot here, price has come down. Now you may be tempted, say for example, before we got this candle here, price has come up, we've got a red dot, we've already had a red dot in the MACD Platinum, come down, and it's gone up. I probably would have had my SAR in there, so it's above there, locking in profit. So you can't see it's stuck in between the yellow lines, but it'd be on that low. Let's go through what would happen. We've got a new high there. Then it would have been taken out there, so we moved that down, and our red line, which is not that one, gets taken to the highs. This one gets moved above it, get it out of the way, get it out of the way, get it out of the way. No, wrong one. Get that one out of the way. Take this to our point of entry, which is there. So then price goes up and down. You might want to bring it down like that. We're in no danger of reversing as yet. Another red dot, and off it goes. So we're still in the sell, still in the sell. I know I've gone through this pretty quick. I'm just trying to get over to that right edge before the video, so it gets a bit boring for you. And so keep on getting lows. We could probably start looking at the MACD Platinum. You'll be doing this as you're going along, obviously. So there's your MACD Platinum there, and we've got a blue QMP. Really not, we can't really move it anywhere as yet. Going to get one more candle and it rolls over again nicely. So there's your SARS move down. We're locking in that small bit of profit. Bring the yellow line down because we're still heading low. We've got lower lows. Remember they leapfrog from the top down. Got another one there. Now we could be looking at the MACD going, all right, it look like we're getting divergence there, which we are. There's a low there, there's a low there. Might be a double bottom. Slightly up higher, and that one's lower, so that's bullish divergence. So you may consider, we've got a blue dot and blue dot there. I would probably bring my SAR down to the top of that candle there because it's sort of poked up. It's dropped away and it's gone a little bit flat in there. And now we're going to now that's your level there. So we're in this area now. That candle, bang, up she goes through the red line. So take your bottom yellow line, take your red line down there. Your blue line's your point of entry, so it's across the top of that candle. Get rid of these other yellow lines so they don't confuse you. They're not in play. Remember, they're out of play until the new high. There's a new high there. New high there. New high there. In the meantime, I think we had a MACD dot there somewhere. No, that's all good. That's all good. Right, there's your MACD. Got a QFP there, and also a MACD red dot. So you go to the obvious fractal, which I would say would be that little spike down there. Now, this brings us to where we are at the moment. We're in a sell. That SAR's been taken out. So there's some there, and there. Now we've got all four yellow lines in play. That's the risk if we were in a trade. We weren't. We're trying to get to a stage now where we're setting up the charts to commence trading. So now I can see exactly where I'm at. I've just sort of worked my way through from historical setups. Just picked a decent range that I know would have been a trade and would have reversed me. I could have gone up here, could have done that one there, but I'm just trying to show you guys a bit of working. So now, if I want to start trading live on this time frame on this pair, I would set my stop or buy stop order above this red line, or on that red line, and that will be the start of the sequence, if that makes sense. So there's been no trading up until this point. Now this is where I want to start. Place my buy stop order there, and we're right to go. So hopefully that makes sense. I know I rushed it a bit, but I'll just try and pop out a few of these videos every now and then, and once you start to see the patterns and the way I'm thinking, it'll come a lot clearer to you. So that's it, guys. So that's the SAR method. Stop and reverse. It's only on a demo, remember, so don't go silly. Best to set up charts like mine and just follow along. And if you need any help, just post something on the Facebook group. Just keep it separate from the normal live trading though, and just make sure it's clear that you're referring to the SAR methods. If you want to post a chart